This is Justin AMZN. On Friday, April 5th, 2019, we had a bullish gap and go today. The open price right here is $18.29, and the high yesterday was $18.28.75. So by 25 cents, a quarter, it was a bullish gap and go. On the daily, we gapped up here. Look at this, just amazing, gapping up here. We didn't quite clear the high of both candles. I mean, the high on this one from, was that Wednesday? Yeah, was 18.30, and then today's open was 18.29. So $1 less, but still, bullish gap would go over yesterday's candle, which was a high wave candle. Like I had said, this candle was kind of like shot across the bow, allows some more bearishness to come in. That happened the next day, well, the rest of the day and the next day. And then today we gapped up. And I mean, we're only a couple bucks away from the next line up here at 1841.30. My guess is we're going to get there. I mean, it's really close. We'll see. We'll see if we get there Monday. But I mean, it's possible this just keeps on going up. I mean, it could just keep on going up a little bit more. The next line is 1863.84. The next line is 1880.05. And then 1900's up there. I don't know if we're going to get all the way up there. We'll see. But it's a really strong bullish move to get this kind of candle after these two. And I think I was just talking about it looking similar to this. We had a bearish candle and then a gap up like this. And it's just, Amazon's just grinding higher right now. This was a massive, strong move. Then we had some consolidation. We were running into the resistance of this channel, the downtrend channel. Now that we're above it, I mean, we're just grinding up, And again, if we compare to what we had done back here, once we got above the line here, we moved up a little bit longer, and then we came back to it. I mean, we could go up a couple dollars more, even to here or a little more, and then come back down, and the 21's really close. Just like here, the 21 was really close. I mean, it could repeat like that. That's kind of what I'm anticipating. So, I've been cautiously bullish because it had such a huge run up. It just seems like it needs a little more rest, but we just made a new high. So, I mean, stay bullish until really it's reversing and very clearly reversing. Back onto the 5-minute, if we just zoom in on the day here, we had a really high wave candle right here. So initially we had a nice bullish move in the first 5 minutes, got way up here, about 1835. Yeah, 1835 on the dot. There you go. And came back down, slightly took out the low, and then slightly took out the low again here. And then we really just pretty much held the open price. And so if you draw in where the open was, there you go. And you connect these highs, you get a nice little triangle here that, let's see, let's get this one a little bit closer. Let me get that exact. What was that high? It's not going to let me edit. Okay. Well, I fixed the 1747 price from the other day. I had to close Think or Swim and then open it again, and then it let me do it. So that's what I'll have to do to get this to work. But if you just take the highs out there and there, we're inside of that range here, and it's just, after going sideways, there's a lot of bears thinking this is going to roll over. There's people jumping in. You got some small candles here at a relative high. It makes sense if it rolls down, comes back down here to where we had an indecision candle. Now we have a hammer. I saw this hammer when it was over here. I'm like, yeah, I really like that hammer at that location. And I saw it too late, or at least I thought it was too late. And then it did that, and then it came back down, and I was busy doing something else when this was happening. It's like, oh man, that would have been a great place to buy the retest, of this breakout. Retest here at this relative high that had broken out, and then had a second retest, and then ran into the close, all with the triangle setting up. So if you don't draw this as a straight triangle, or I'm sorry, a straight bottom on the triangle, you kind of do something I mean, that doesn't work. That doesn't work. You know, if you maybe do this instead, you know, you catch some of the lows in here. I like the flat bottom a little better. It's a lot cleaner. But I just like how Amazon forms these triangles. So there were some opportunities to buy. Obviously, if you were buying down here with the hammer, you want to be really careful which strike you're doing. So when you're right here on expiration Friday, you know, right on the 1830 strike, or you could look at the 1835. But I mean, the 1835 was the high of the day. It could get there, you know. What's going to happen in that move? So let's take a look. Let's go look at the 1835, and we'll come back to 1825. So the 1835 strike, sorry, let me go back and figure out what time that was. It was 11:55. So 11:55 right here. If you were buying that, I mean, you're risking a buck, a little more than a buck, $1.25 or $1.25, something like that. And you have a lot of opportunities to buy as this is going sideways for 30 minutes on the option and then starts to move up. But it goes, you know, had you bought like absolute zero, you know, 1 by 0, it ran up to 3, would have been probably tough to exit at 3. I don't know if that wick is real or not. But you're trying to go in the direction of where the strike is on expiration Friday. And all the while, the premium is getting sucked out of this. That's why it goes side, even though it's going in the direction of the strike, not the next strike, but a very near strike. And it's just not giving any more value. So if you look at the 1830 strike, let's go to the 1830 strike, you'll see that it costs a little bit more. So it costs like $3 down in here at 11 o'clock. There was opportunity to buy again at 3 by 2, or maybe even 3 by 250 and get 2 of them. And then as it moves up, as the stock is moving up, it's actually moving in the direction because you have actually some intrinsic value. That runs up to the high up here on 550. So 3 by 2 up to 5, that would have been another 2R. That works too. If we look at the 1825 strike, so we're down here. Let's see, 1155. We're putting a low at 6. There's another opportunity to buy that low at 6 again. 6 was the price we were very close to here, and right here, and here, and here. So you could have been looking to buy at 6 anyway at that low, and then to get the hammer on this candle would have been even better. So 6 by 5, maybe 650 by 550, and that's one that ran because now you're $10 in the money at 1835. The option should be more than 18, slightly more on expiration Friday, but you're going from 6 or 6, let's say 6, up to the 10. That's 4R. That was the best option to use. That's not too expensive and gives you some intrinsic value to just continue with, because every move up, even the pause here, you know, where we go sideways, I mean, you still have so much intrinsic value that the option is actually, you know, mostly continuing higher. There was a little bit of a pullback, but you keep that intrinsic value. That's what's key. So, you know, had you bought even 7 by 6 after it made these candles, well, if you bought on this at noon, the noon candle, you probably would have been stopped out. So that wouldn't have worked buying 7 by 6. But because it had just made low at 597 and low here at 597, probably would have won your stop below 597, like more than 5 at 590, or I'm sorry, lower than 590 where this one was. But anyway, you know, that's kind of the setup. You're buying off the lows every time it came down to the low, to the low, to the low, you know, off of the open price. We never even got a close below this open price. How bullish is that? That really actually does help, you know, suggest that we should continue higher, because we didn't get a 5-minute close. There was, bears were trapped. That's what happened. This close was at 1829.06. So there were so many bulls buying here. There were so many bears closing their positions here that it pushed the stock back up. And we just continue to get closes above this price until we actually bounced off of it and ran up. At one point, like at this point of the day, before, as this triangle was forming, I think the range of the day was like 10, $11. It's like, this is a really small candle. I wonder if it's actually going to just go sideways all day, or if it's actually going to push above the high or break down below the low. It's like, that was a really small candle. It was tiny up here. And then we broke out. It was like one of these, right? 11.13. So today we ended up with a range of 13.39, and this one was 13.77. So we're actually smaller than that candle. That's crazy. Really small candle. Yeah, we haven't had a small candle like that in a little while. I remember looking through these a couple of weeks ago to find that. But anyway, if we go back and look at options, so 1825, there were opportunities to buy around $6 all day long, and then just, I don't know if you would have held on to that beyond 10. I mean, then it pulled back again. The place it pulled back to, it bounced with the Morningstar reversal. Then it pulled back again, holding that Morningstar reversal with a squeeze. That's what helps it move, continuing higher. Both of these pulled into the 21. Great opportunities there. And that's the point where if you got in like 6 and ran to 10, and then you're looking to get in on a pullback, I mean, the resistance here, the resistance here that is being retested as new support, it was right about $8, $8.50, $8.25, you're buying. And you're not waiting for it to come all the way back down to that low again, because it's actually broken out, So you're not looking for a price at 6. You're looking at maybe near this big candle, 750, or get your stop below 750. So maybe you are doing 8 by 7. Maybe you're doing 850 by 750. That would have worked here up to 10 again. So like 8 to 10, another 2R. And it would have worked here again up to 10, another 2R. In this case, it actually continued running, and within 20 minutes here of pulling back again, you were making your way right back up to these highs. And if you didn't exit and you just tighten up your stop, because you're up a few R already from getting this move and getting this move, and now you're getting this move, it's like, just wait to exit. Or you can exit because that's your plan, get in at 8, get out at 10, and it continues to run up. So I didn't do any of that today. I did not make money on this moving up. I was busy doing other things. But recognizing the opportunity, looking for what those candles are. Hopefully, some folks took action on these candles and were poised to make some really nice gains. Even if you had just held through all of this and just tightened up your stop as it went up, then you had the potential to go from 6, 650, something like that, all the way up to like 12, even 13 right at the close. But probably somewhere around 12, maybe 11. So from 6 to 11, that's still a 5-hour trade. That's a great day, So yeah, on the put side, puts were losing value just all day long. This is the 1825 put. 1830 put was a little bit flat. There were some opportunities to buy like at a low, like 2, and flip it out at 3. Or no, I'm sorry, buy at 3 and flip it out at 4. So some opportunities to do that, but depending on the spread, the bid-ask spread, I don't know if that would have actually worked. And then the 1835 puts, you're in the money to start out, and you lose you lose that premium pretty quickly. That one was coming down to like $5 and bouncing, so 5 to 7 would have been hard to get that too, just because every time you made a high, the highs and the lows don't match up as well on the puts. I guess they do a little bit here to here. But you can kind of see we're losing some value. We're getting the premium sucked out and just end up closing out the money. So puts were not the way to go. Calls were the way to go. And, there was a lot of a lot of bulls getting in. This was 30 minutes of bullish candles here. Pulled back with a few large bearish candles. Bounced again with a strong bullish. Bounced again with a strong bullish. It's like those candles had to get out of the way for us to just kind of chop around and just slowly grind higher. Like, that's all AMZN did today. It grinded higher, Great move today. Hopefully you made some gains. and learn something about how to trade it better, make those gains larger, reduce your losses, anything like that. So we'll be back next week to see if we can get up to our next line, 1841.30, and see, you know, what else is on the horizon. You know, this is just not slowing down. This is just so bullish. So would not be surprised if we, you know, get some reversing right here. We had some large candles. We pull back some, but if it doesn't, I mean, I got my eye kind of on the 1900s, low 1900s. We're into some of this initial support here once we got up here the first time. And, you know, I don't think anybody's really thinking, I don't think a lot of people are really thinking Amazon at 1900 again so soon. But, I mean, it makes sense. I mean, it's just so strong. And this massive pattern just is really setting up a huge move. That's what we've been talking about. Let's see what this looks like on the weekly. Yeah, the squeeze just fired. So our weekly squeeze was forming 1, 2, 3, 4, 5, 6, 7 weeks. It just fired this week. Obviously, it's firing late because we're up 4 weeks in a row. Sorry, we're bullish 4 weeks in a row. We were up higher on this week, higher than this one. But wow, that looks almost like a shaved bottom end. It looks like a Morbozu. Open the low, the high and the close. Yep, it's pretty close. Nice for a weekly. Very little wicks. Anyway, for right here, we made it 4 weeks up here, and then pull back 3 weeks. We're up 4 weeks in a row. We'll see what we do. We're up 5 weeks in a row here, 3 here, 2, 2, 2, 5 here. Pretty flat though here. This is going back in time quite a bit. 3 here, 3 here, 6, 1, 2, 3, 4, 5, 6, 7. Wow, 7 there. I think I've counted these before. This seems really, whoa, sorry. Let's get back to this decade. And this month, this year, early this year. Anyway, I would not be surprised if we have some pullback, especially because the squeeze just fired. Some people are gonna be looking to take some profit already because, I mean, look at this momentum. It looks like we're screaming higher. We did get a close above this week. We're running right into some resistances. Let's see, what was this line? This is 1863.84. That was some of these lows of these larger candles. So yeah, some of the indecision candles here before we continued higher. We're right into these levels of indecision. If we can get some indecision for a couple weeks, pull back some, I would rather have a pullback, and you know, a lot more people are going to reload when it pulls back some. You know, we'll see what happens there. And then on the monthly, no squeeze. Man, that candle looks funny. Maybe it's just how I have the chart. The candle looks so small. Oh, that's a monthly. Yeah, it's just still forming. Small like that one. But anyway, we've had 3 bullish months in a row. We've had plenty. We had 5 here. We had 5 here. 2, 2, 3, 3. So, you know, I'm not really looking for anything specific on the monthly. I just like that we broke out of this smaller candle. And really with this, when this candle formed on a monthly and then we started to break out, at that point is when you could have bought some out of the money calls, you know, a couple hundred strikes or a couple $100 strikes out of the money, you know, a couple like 4, 5, 6 plus months out. And we're probably getting into some of those prices now. And those options are probably up huge. So that's the flip side of this is, you know, going through this assessment, going through this analysis, figuring out, you know, what's likely to happen, what's possible to happen. And I love diving into the 5-minute because there's opportunities there. There's also opportunities on the daily, on the weekly, on the monthly. There's opportunities over longer periods of time if that's where your time frame is for trading too. So yeah, it's just not where I've been putting my focus. So anyway, let's jump back down into the daily and just recap that We got these downtrend channels. It would be fine if we continued up higher. I would expect a pullback into this at some point. Our X marks the spot is not very clear right here. My idea of it is this price on this day. So April 15th being at around 1747. I'm going to say that's where I think it's going to be. Similar to what we did here, where we pulled back. We pulled back in the 21. The 21 looks like it's going to clear this. So the 21 is the last 21 candles, which means we don't have all this flat area. We started to lose those. Some of these that were pulling back down. We started, those 22, 23, 24 candles ago started to taper off, back in here, and we just started to climb rapidly. So looks like the 21's moving up pretty quick and may offer some support, but I'm kind of anticipating a bigger move down into 1747 or even through that slightly. I don't know that we're going to get below 1700. If we do get below, let's say this, if we get below 1700 and we pull down to like this far, it's going to look different than this consolidation. It's going to feel a little bit more like one of these where we pulled way back down, but it's going to be a great buying opportunity, especially because you're retesting like this yellow line. And that's why I've left these on here. This one, I don't think it's as fitting anymore. I mean, we had that false breakout here with earnings, and then a false, breakdown or pull back into it. But this is where that bounce started. So if we do end up pulling down to this level, to 1600, I mean, that's a great, super great buying opportunity. That would be way down here. I feel like we're going to do more to hold the 1700 because that's this massive neckline. But we may not even get that far down. If we do, great buying opportunity. If we don't, look for a bounce somewhere above it. Obviously, that's what I'm saying. So we could pull into this line. This could also be a slanted neckline, which would get below 1700. So that could be another place to buy. But if we get into 1700, might be a time to look at something longer term, get into shares, get into some longer term options, and really look to hold this thing to new all-time highs into the end of the year or something. I mean, or even by the fall. That'd be cool. Anyway, hope you enjoyed this video. This is Justin AMZN. Thanks.